And Moody's ratings agency says the coronavirus pandemic and the sharp oil price drop have led to portfolio outflows from emerging markets and will exacerbate the slowdown in economic growth. According to Moody's, at a time when government debt levels have increased to over 50% of GDP on average across Africa, banks' financial performance, asset quality, profitability, and foreign currency liquidity will likely suffer. Banks, specifically in oil exporting countries, due to their heavy exposure to the oil and gas sector, primarily Nigeria, will face renewed asset quality pressures. Moodys says that partly dollarized banking system like Angola, DRC, and Nigeria will also be faced with renewed foreign currency liquidity pressures if the portfolio outflows persist. Despite these challenges, Moodys says its baseline scenario assumes a significant global disruption, but not an extensive and prolonged slump. And Uganda is seeking a $190 million loan from the World Bank to help cushion its economy from the impact of the coronavirus pandemic. According to the country's finance minister, the government will seek a $100 million budget support loan for this financial year and another $90 million for the next financial year. Uganda will also approach the International Monetary Fund for help with a projected decline in foreign exchange reserves from 4.2 months worth of imports to 3.5 months. All right, central banks around the world are coming up with measures to cushion the impact of the coronavirus on their economies. And on Thursday, the South African Reserve Bank cut interest rates by 100 basis points and announced a raft of emergency liquidity measures. Let's bring it now, South African economic analyst there to lead us into what exactly is happening there in South Africa. Trinity Nkube joins us. Thank you very much for joining us on the show, Mr. Nkube.
Good afternoon. Thank you for having me.
Now, the Reserve Bank cut rates by 100 basis points yesterday. What's your take on this, and is it enough to boost investor confidence?
Well, it's necessary. It's in line with policy coordination across the globe, as you just alluded to. It's not enough. However, we have to realize that that has to be done. Over the long term, the monetary policy impact lag is over 18 to 24 months. So it will take a long time for us to feel the impact of the monetary policy stance that they've taken. However, they had to do something. And it's a step in the right direction. I mean, we're in for a rough ride.
Now, the Reserve Bank also announced other emergency measures. Can you tell us more about these?
From what I'm aware of, they've taken on to introduce price controls. What happens in South Africa, we live in a very how can I put it? We live in a very concentrated market space. So what happens when we have a crisis like this? Retailers tend to increase prices, sometimes artificially. You're already starting to get shortages in supermarkets and so forth as people are stocking up so that they can stay at home. In that case, the government has to step in with the central bank to put price controls over basics, particularly food items and some of the medicinal supplies. So those are some of the measures that they've put. From my own experience as an economist, price controls have never really worked. So I suppose what could be done here is a bit of coordination and empathy across people so that there can be an understanding. However, the price controls are there to try and cushion the public from soaring prices.
Now, aside from the monetary policy stimulus, what measures are being put in place by the fiscal authority to curb the impact of the virus?
So what has happened at this point is we are hearing that we're going to have business rescues. We are going to have the small to medium enterprises being bailed out to some extent. There's, in fact, a platform that is being set up in the coming week where small businesses can actually approach the government directly, to voice their concerns and to articulate what the challenges that they might be having. As we speak, a lot of businesses are losing, revenue. Workers can't go to work. There's no free movement. So the government is stepping in. They're setting up a fund. However, this is coming at a time where, the government itself, as we have already discussed over the past few months, They're in a very tough, fiscal, challenging environment. So there is some help. I reckon there is going to also be global assistance. You alluded to Uganda and other countries reaching out to the IMF and the World Bank and so forth in order to stabilize the business environment.
All right, thank you very much for your time, Trinity Nkobe. And the International Air Transport Association says Nigeria's aviation industry stands a chance of losing over 160 billion naira in revenue and 22,200 jobs from the disruption to air travel due to the continued spread of coronavirus. According to the association, the country would also lose approximately 2.2 million passengers. IATA says international bookings in Africa are down roughly 20% in March and April. Domestic bookings have fallen by about 15% in March and 25% in April. As at March the 11th, African Airlines had lost $4.4 billion in revenue, and ticket refunds increased by 75% in 2020 compared to the same period in 2019. And restrictions on foreigners coming into Kenya have delivered a big hit to the country's tourism industry, with some hotels on the coast reporting occupancy rates as of well below 10%. Tourism is among Kenya's leading foreign exchange earners, which brought in 163.56 billion shillings last year. Kenya banned entry on Sunday to people traveling from any country with reported coronavirus cases for 30 days, with the exception of Kenyan citizens and foreigners with residence permits. And Egypt has built a pilot 3.6 billion Egyptian pound model industrial park for furniture near the Nile Delta city of Damietta, but it may face an uphill battle luring away craftsmen from traditional workshops in the old city. The project aims to boost economic growth and create jobs in a country where about a third of 100 million people live in poverty.
Egypt has built a multi-billion-pound furniture city near the mouth of the Nile, a pilot for a series of industry mega-hubs it wants to throw up across the nation, but it could face a struggle to populate it. The aim of the £3.6 billion project and the other planned specialized parks is to boost economic growth and create jobs badly needed in a country where about a third of the 100 million people live in poverty.
The idea for the city came about after the presidency and the government's initiative to rely more on local production and decrease reliance on imports, while also increasing exports to international markets. So the government began to focus its attention on areas with industrial clusters, such as the Damietta Furniture City and the Rubiki City, which manufactures leather.
However, only 400 of the 1,400 newly built workshops have been sold so far.
You've seen our neighborhood here. Our houses are above our workshops. There is not a worker among us who will go to that city over there. They should have first come and consulted the people here, the craftsmen, those who understand what the work will be like. But they made a workshop that is 50 square kilometers. How am I supposed to employ 30 craftsmen inside that space?
The head of the furniture division at Damietta's Chamber of Commerce, Salama Al-Ro, pointed out that it was still early days.
And with that, we draw the curtain on today's edition of the program and, of course, for the week. Thank you for watching. I'm Chimeze Obi Iwago.